Good morning, homeschoolers. That was a pretty awesome quarter rate cut yesterday. 0.25%. That was pretty phenomenal. I mean, when you lower rates by 0.25%, you really expect stocks to run like crazy, up about, 1%. And then, quantitative easing. We're going to add back do that again because the market can't function without it, basically. Read Michael Burry. The plumbing is broken. The money markets all jammed up, gummed up. Every time they get a chance to open things back up, they do. They're adding more money into the market. What happens to that incremental dollar that goes in? $40 billion a quarter. Ira Jersey from Bloomberg said it was going to be $150 billion or so. What's his face over there at the Gundlach? Jeffrey, Bills fan, said, look, $200 billion. And, this is going to devalue the dollar. I'm going to buy assets that are not dollar denominated. And he's making money doing that. And said the rest of the world had a long way to go to catch up. The bond market is 300 trillion plus that we know of. We're not counting a lot of private stuff out there, which is more than the size of the stock market, considerably more. The economy, Witkoff was, no, not Witkoff. It was Lutkin, whatever that Howard Lutkin, Trump's bestie that just was on CNBC pumping stocks a minute ago, said that, we're going to grow at 6%. Everything's wonderful. We need low rates. And he's got a good point. The United States is paying a higher rate than Italy, then paying a higher rate than Portugal, Ireland, Greece, on and on. So who should get the lowest rate? It's the people with the highest credit. The people with the highest credit are the ones that create money willy-nilly out of thin air. The United States of America, that's right, Jerome Powell. $40 billion a quarter going into the economy. That incremental dollar then goes into what? Further down the curve, maybe. That dollar, it's displaced and winds up into stocks. Ultimately, it doesn't go into your pocket until people freak out. Then it winds back up, pushing rates down possibly, goes into money market. Money market goes back into T-bills, which they're buying right now. They could have started at about 335 this morning. I watched the QQQ. It's at 624.51 currently. At 335 this morning, I was pretty happy with my short position. I'm cranky. I had a short position on triple Q, and it was looking to make me a lot of money this morning. Now it's looking to make me basically nothing. So, yeah, I'm cranky. I'm going to have to go ahead and do something about that. The morning, probably move that out and up and over and short, long. Wait for a big move. They don't want a big move. I had the right position on the big move last time, and I went into a meeting and I put a little hedgy in. Anyway, live and learn. So that incremental dollar winds back up in stocks, pushes stocks even higher. And that's what makes people really excited about Trump and the economy, because you cannot get a job. They're worried about jobs. They're correctly analyzing that maybe there's less jobs going around, that there's not 40,000 being added every month, that maybe there's 20,000 being subtracted, because the numbers always come out, they get fixed, they get re-looked at. And it's like, oh, the whole last year of Biden being in office, after he left office, there was actually a subtraction of jobs, not addition, every single month, the exact same number. No conspiracies here, because none are necessary. It's right there in front of your face. The obvious lies that are spit out at you by the government statistics offices are just that. We are no greater than the Soviet Union back in the old days with the propaganda stuff. And it's one party or it's the other party, and it doesn't matter. So the numbers are completely pointless. What does matter is earnings. And Oracle is down $29.01 right now. And that contagion spread throughout the market last night like wildfire. 9 hours ago, I got a notification that QQQ, that the Nasdaq, the Nasdaq 100 is down 1.51%. As it stands, it's rallied 1% since 3:35 this morning. I woke up doing a happy dance. Now I'm sitting here pissing my pants because they ain't no fun. Anyway, we're here to trade. We're here to learn. We're here to look at my stupid face and have a good time. And what else is going on out there? Michael Burry tore apart the Fed monetary issue. I suggest you go read his latest post regarding FT Alphaville's post, actually. And it really ties everything together in that the financial system is busted from a funding standpoint. And people are on the verge of freaking out at all times, but they're rushing to buy these stocks because that's the story. And that's where we're at.